All right, welcome everybody. I'm Jeffrey Turnmeyer. I'm here to tell you what in the world crashed in 2022, right? So I made this epic prediction back last year that we would see a certain segment of the market pretty much tank, all right? What segment of the market was that? What was it? S&P 500 down like 20%, just hitting that on May 20th, 2022. That doesn't feel like a crash so far. I mean, just breaking into the bear market. Where was the crash, right? Where was it? Where was the crash? We're going to jump in and cover it and dig in and find out what in the world led this crash that everybody talks about here in 2022. I did the last video. I'll put a link up. You can go over and watch it. 5 technical reasons that I think the market bottomed. We did see a lower low on May 20th, but just marginally lower, and it still supports the bottom being in. So we're gonna get into it here and see what actually crashed. All right, so first up, check this out. Price to sales ratio. This is an important thing we gotta start with. So price, everybody knows the price. Price of a stock, price of something you're willing to pay for, everybody knows the price, right? You know the price. What is a price to sales ratio? Now, a company that's listed on the stock exchange, hopefully they have sales, right? If they don't have sales, what the heck is even going on? I mean, there are some special cases that where they don't have any sales, but most companies have sales if they're listed on a public exchange. So we take the price of that stock and we take the sales of that stock and we make a ratio. Let's check out what I said in a webinar about companies with a price to sales ratio greater than 20. Let's rewind back to October over here. All right, here we go. Rewinding, and almost there. Just a little bit more. And here we go. Play. In fact, let me just show you. Last time we had a profit to sales value of 20x. Back here in the late 90s, 3.6 trillion. And now we have 4.5 trillion. Isn't that freaking nuts right there? In simple terms, this means that for stocks to maintain this profit to sales value of 20x, every stock would need to pay you 200% of their sales via shareholder dividends for the next 10 years straight, just to justify these prices. And look how it worked out back on the last bubble like this. Just came right back down. Historically low level, we ramped up, came right back down. Now we're ramped up again. You see what I'm saying? So I did that webinar back in October and November, and I was talking about how to add crash protection. Let's jump into what the actual list was at that time. So I had my analyst pull up this list. It's a list of stocks with a price to sales ratio greater than 20. Now there's 104 tickers on this list. Whew, look at them go through the screen. All right, so 104 of those. Now, there's some high flyers on here. A lot of this stuff is probably in the ARK fund. Old Kathy Woods, she probably was heavy into a lot of this stuff. Now, these are the companies that I said were likely to get slashed in the coming market crash. But that was back in October, November, right? So, how did these companies actually do? Well, out of 104 tickers with a price to sales greater than 20, 60 of them lost more than 50% of their value. In fact, the average stock on this list lost 53.9%. We had Blue One Card down 83.2%, Beam Therapeutics down 62.7%, Intelia Therapeutics down 65%, Rita Pharmaceuticals down 70.9%, Bridge Biopharma down 85.3%, Morphic Holding down 64.3%, Mirati Therapeutics down 61.2%, Zylab down 64.7%, Bicycle Therapeutics down 67.6%, Snowflake down 60.4%, Cloudflare down 71.3%, Fate Therapeutics down 60%, Bill.com down 60.4%, GDS Holdings down 52.7%, Asana down 84.1%, Marathon Digital Holdings down 82.4%, Zscaler down 57%, Atlas Sane down 60.5%. Twist Bioscience, down 70.8%. Chimera Therapeutics, down 76.5%. Unity Software, down 72.2%. Mongo Database, down 50.2%. Sprout Social, down 63.4%. 10x Genomics, down 69.3%. IMAB, down 83.2%. Lemonade, down 68%. Garden Health, down 69.4%. Innovative Industrial Properties, down 51.1%. Upstart Holdings, down 87%. Digimark, down 66.7%. Schrodinger, now some would say Schrodinger, a little funny, but 56.8%. HubSpot, down 58.5%. Okta, down 66.3%. Beijing, down 61.5%. Silvergate Capital, down 63%. Outset Medical, down 60%. InMode, down 76.1%. Encino, down 58.6%. Optimizer RX, down 73%. DocuSign, down 72.3%. Affirm Holdings, down 83.7%. Star Surgical, down 50.7%. Monday.com, 69.1%. Sentinel One, down 63%. Hornet Digital, down 75.7%. Coupa Software, down 71%. Avalara, down 75.7%. Fiverr, maybe you've used them, maybe you've heard of them, down 77.5%. Ambarella, down 59.9%. Silk Road, down 53%. Sea Limited, down 77.5%. Snap, parent company of Snapchat, down 56.9%. Elastic, down 65.4%. Zoom, maybe you watched a webinar, down 67.8%. Wildlife Solutions, down 76.2%. Appian, down 51.2%. Twilio, down 65.7% to round out the list, with an average move down of 53.9% on this list. Can you believe that? If you were in any of these, I am sure that this feels like a crash. That was a crazy list of stocks that went down big time. You might be saying, how do I avoid this kind of thing in the future, right? How do you avoid it? I'm here to tell you, just avoid things that sound a little crazy. All right, so key takeaway, when your price is crazy compared to your sales, like 20 times higher or more, in some cases 25,000 times, well, we're not even talking earnings here. We're talking about sales, just the sales of the company. That's an opportunity for things to get out of control. When your price is just rocketing up and your sales are relatively low, we're not even talking about profit or earnings per share. We're just talking about sales and technical things that matter more than this. So there's things that make a company valuable, and having a high price compared to sales is not one of them. Now, there are some companies on there that may go on to do great things. I'm not saying that they're all trash companies. What I am saying is that it was dangerous to trade those in any kind of leveraged way, and the fact that they dropped kind of shows that maybe it wasn't the best idea. So think about it in the future. Maybe, just maybe, be careful of what you invest in. All right, that's going to wrap it up. Make sure that you like and subscribe. Click the little bell to get notified on notifications. YouTube recommends a video. I recommend a video. Check them out and keep watching. We'll see you again soon.